Is the Canadian dollar in trouble? Because if you've been watching the news, checking exchange rates, or just trying to buy groceries lately, you might already feel like something is off. The loonie has been weak, really weak. And a lot of Canadians are starting to wonder if this is temporary or if something bigger is happening. Let's break this down properly, because what's going on with the Canadian dollar affects every single one of us. Whether you invest, whether you travel, whether you just buy food at the grocery store. First, let's talk about where the loonie actually is. For most of the last few years, the Canadian dollar has been trading well below the US dollar, sometimes around 72 cents American, sometimes lower. To put that in context, in the early 2010s, the loonie was at parity with the US dollar. One Canadian dollar bought one US dollar. Today, you need close to $1.40 Canadian to buy one US dollar. That is a massive shift. And it did not happen overnight. So what is actually driving the loonie down? There are a few big forces working against it. Number one, interest rate differences. When the US Federal Reserve keeps interest rates higher than the Bank of Canada, global investors move their money to US dollars to earn that higher return. That demand pushes the US dollar up and the Canadian dollar down. And right now, Canada has been cutting rates faster than the United States. Number two, oil and commodity prices. The Canadian dollar is what economists call a commodity currency. When oil prices are strong, the loonie tends to be strong. When oil softens, the loonie weakens. Canada is one of the largest oil producers in the world, and our currency reflects that. Number three, productivity and investment. Canada has been falling behind on productivity for over a decade. Business investment is weak. Major industries are stagnant. Global investors notice this and they price it into our currency. Number four, political and trade uncertainty. Trade tensions with the United States, tariff threats, and policy uncertainty all make global investors nervous about holding Canadian dollars. So what does a weak loonie actually mean for the average Canadian? It means everything imported costs more. Groceries, electronics, cars, clothing. A huge percentage of what Canadians buy is priced in US dollars behind the scenes. When the loonie drops, those prices quietly rise. This is one of the biggest hidden reasons inflation has felt so persistent in Canada over the last few years. It means travel to the United States is more expensive, a weekend trip to Seattle, a Disney vacation, a quick shopping run across the border. All of it costs significantly more than it used to. It means Canadian investors with US dollar investments have actually done better than they realize. Because when you own American stocks and the US dollar gets stronger, your Canadian dollar returns get a boost on top of the market return. And it means anyone earning income in US dollars, like remote workers or freelancers, has effectively received a raise. So here's the framework. 4 steps. For any Canadian who wants to protect themselves from a weak loonie. Step 1. Hold globally diversified investments. Do not put all your money in Canadian companies. Broad global ETFs naturally give you exposure to US dollars, euros, and other currencies, which protects you when the loonie drops. Step 2. Be smart about cross-border spending. Use a credit card that does not charge foreign transaction fees. Those fees can add another 2.5% on top of an already painful exchange rate. Step 3. Avoid converting large amounts at airport kiosks or bank counters. The spreads there are brutal. Use a low-cost platform if you need to exchange currency in significant amounts. Step 4. Pay attention to the bigger picture. A weak loonie is not just a number on a screen. It affects your grocery bill, your investments, your retirement, and your travel. Understanding it makes you a smarter Canadian consumer and investor. So back to the question, is the Canadian dollar in trouble? The honest answer is that the loonie is facing real long-term pressures. But Canadians who understand what's happening and adjust accordingly can protect themselves and even benefit from it. If this helped you, hit subscribe. New Canadian personal finance videos every week. I will see you then.